Welcome back to U.S. Farm Report this weekend. Joe Vaclavik as well as Mike North joining me. The tone has definitely changed in the markets. I mean, last weekend, Joe, we had analysts talking about how prices, because of the heat, because of the forecast, that prices could possibly go to the moon when it comes to corn. This week, a much different story. Did the weather forecast truly change that much, or is there something else that's at play right now?
There was a little bit of a shift to the weather forecast. I saw more rains in the GFS model during that first week in July for maybe call it the western 2/3 of the Corn Belt, Iowa, Minnesota, Nebraska, the Dakotas. The forecast isn't perfect. It still looked dry for a lot of Illinois, a lot of Indiana, a lot of Ohio, places further east. But there was, at least in my view, and I'm not a meteorologist, there was a material shift in the forecast. The other thing that's out there that is top of mind for me, maybe even more importantly than weather, is recession risk. Commodity markets don't like recessions, and it appears as if we're headed towards a recession. And I think that that's a big factor that has had an influence on large speculators and the way that they behave in the markets.
Well, Mike, we know this time of year that the forecast literally doesn't even change by the day. It changes by the hour in some instances. So let's say we do have that forecast change. It does take some of that rain out of the forecast for some of those key states. Do you think that could be a market mover, or is that recession, that underlying concern there, going to dictate these markets over the next few weeks for sure?
Well, this is always a very volatile time of the year. I mean, let's just put all our cards on the table. We can literally turn a market in a moment, and it can flip on a forecast. To your point, forecasts change regularly through the course of the day, and we can, as we've observed in previous years, see the markets flip on a changing forecast. We're moving into the end of the month. We've got some key quarterly reports coming out with acreage and grain stocks. We've got traders that have blown out and dropped positions over the course of the last month that have now some material room to add back into some length. And to Joe's point, this recessionary discussion has taken a grip in the market. That too can be equally a fickle discussion as we're kind of feeling our way through it. So this is a time of the year when you look for things to be volatile. It's normal to see markets move, and I think with the big downplay that we've seen in price, it kind of opens the door for some upside as we go forward, even if it's short term. And so I think if I'm a producer, I'm watching this really, really closely. If I've been lagging on sales because I'm too bullish, I'm getting ready for some sort of an opportunity that may present itself, even if it's short term.
Joe, could the acreage report be one of those opportunities? Right now, what do you think the trade is expecting for USDA to come out with next week?
Everybody's going to be wrong on June 30th, as they always are. This is a report that's highly unpredictable. I think that this year in particular, there was probably a big shift versus March intentions. We know first off that March report is horribly inaccurate. Generally speaking, the survey responses are terrible. I think there was probably some acreage shifted in different areas for different reasons. Up north, we may see a reduction in corn acreage because of weather. In other areas, you could see increased corn acreage versus intentions because of prices. I think there's a ton of variables. I think there is an enormous potential for a surprise, whether that's bullish, bearish, sideways, up, down, I have no idea. But I think we'll be surprised in some way, shape, or form. It's a big report.
Yeah, Mike, there are always surprises when it comes to that report. What do you think would be bullish and what do you think would be bearish?
Well, obviously, as you look at the landscape, there's a lot of discussion of about 1 million acres flipping from corn to beans. To Joe's point, I think there's a lot of regional variance to that. And so I agree with him that, likely people are going to be wrong in some capacity. Whether we add more beans or add more corn remains to be seen. But I think all the way around, you've got a setup right now that allows for the surprise to maybe favor corn a little bit. Bottom line is that, we've been talking about this big departure away from corn that number is going to be watched really, really closely, because I don't see that in the Midwest as much as I might in the Northwest, as Joe pointed out. But let's not also forget about the stocks report. That report's over the last couple of years been known for a few surprises of its own, and given all of the tug of war, if you will, across the major demand fronts. There's room for a lot of shuffling as we've looked at $8 corn with regard to corn utilization and feed. That number could be a little bit of a shocker. We could see some adjustments on the soybean side. There's a lot of different things here that could slip into that conversation June 30th. And I would say after a big sell-off like we've witnessed across corn, wheat, and beans, that would really open the door for some positive surprises. Markets like to balance themselves, so to speak, and when you see big sell-offs, even if you can't fully explain why, they can be met with bounces back in an upward direction.
Well, there's a lot more to talk about, from demand to also what's going on with these cash cattle prices. We will cover it all with Joe and Mike coming up later on U.S. Farm Report.